Good morning to all traders and welcome to this Wednesday's Market Science video. 20th of January today. It is the inauguration day of the 46th US President Joe Biden. He is going to swear in today, starting his presidency in the midst of a recession, of one of the deadliest pandemics in the history, and also in the midst of the most toxic political environment in the US ever seen before. That, of course, comes following Mr. Trump's actions before he leaves the office, and he's not going to attend the ceremony as well. So today it's at 5 GMT, actually in the evening. This is when the celebration, the ceremony starts. Okay, now we have seen a huge rally since the election day, right, back in November up to today. It has pulled around a 13% gains, and this comes in the historical records, second to Hoover's performance in 1929, just before the Great Depression. Now, is this like, am I calling for another depression here? No, it's not what I'm doing. I'm just saying that this is quite an event. It's quite a similar historical relevance, let's just say, to just not mention it. Okay. Now, how markets will perform, obviously, in the days to come, will really depend on how quickly the new administration engineers a recovery, if at all, right? But we hope there will be one. Now, while many investors did indeed turn optimistic amidst the rollout of the vaccinations over the past few weeks, Congress has not yet even approved the $1 trillion package, stimulus package that Biden called for, right? That was actually proposed. So the rally is likely to continue if this is going to be approved. And the truth is that with the new Treasury Secretary being Yellen, for her, the Fed, the government needs to act big, and the Fed as well. So I think this is going to accelerate the recovery if that comes in. But obviously, there is other intrinsic risks or extrinsic risks as well that come with with throwing money into the markets. But we're not going to talk about those now. What I'm going to do, since we have also the Bank of Canada interest rate decision later in the session, I want to focus a little bit on FX minors today. Okay, we're going to have a quick look on Aussie against the Canadian, since both of those are commodity heavy, commodity sensitive, and also risk assets. We're going to go on Aussie against the yen, which is as a risk asset versus the safe haven, and also going to have a quick look on the higher yielding euro, which is also considered a risk trade at the moment, against the Canadian as well. Okay, so starting on Aussie account, I was just looking at this structure over here, to be honest, right? And I couldn't decide whether I want to call it an impulse or not. And because I see those repetitive bounces over here, yeah, and also we are actually in wave 5 of 1, right? This is what I'm looking at. Is because back lower down, we've ended I'm looking at the end of the bearish move on the downside, and this is a reversal, primary wave 1, right? So when we finish this, we'll go for wave 2. Since this is a wave 5, it really fits well calling this an actual ending diagonal, but 33333, which is a corrective one, right? And here's why: because I don't like this as wave 3. Okay, this one, you could say this is 1 2 3 4 and go ahead and extended 5, but the truth is that if we count this as a 3, then it means that we ended up here. And the truth is, if we look at this structure over here, this really looks corrective. So I doubt we ended up here. For that reason, I actually make my main scenario as a corrective ending diagonal over here. Okay, so that's it. And if we take also the channeling technique also in mind, yeah, all waves actually done the retest. So it's very possible, yeah, also supported by the MACD, so that this is a point where we're going to start seeing prices moving higher. Okay, this is going to be for a last move to the upside, excuse me, for the last move to the upside to take out wave 5. And where are we going to go? Well, we can just simply use our Fibonacci tool, yeah, for wave 3 and 4, do the 61.8, and look at this, 1, okay, and a very good level for a false break, okay, and a very big handle indeed. So this is what I'm heading to, okay. That's for the AUDCAD. Now Aussie against yen. By the way, I'm looking at a stronger Aussie, right? So which means in the commodity Canadian dollar, which is very well affected by oil, I think is going to perform worse than the high beta Aussie. Okay. Now, if we look at Aussie yen, it's a similar pattern, but here the structure is different, and for that reason, I was able to call this. It's still again actually a wave 5, but here we are looking at we're still correcting. We're on wave X. We haven't turned. Okay, we're still moving in a double zigzag over here. Here's what I'm looking. I'm looking at this wave 1 because we have a 5-wave move over here. That's a correction. Then 1, 2, 3, 4, and 5. Again, very nice correction. Yes, 1, 2, 3. I'm looking though here, since we also have MACD signal, and on the other side, yeah, over here. I'm looking at another leg down. Okay, and I will tell you why. It's simply because we didn't actually take, if we take into consideration channeling technique, we didn't take out wave 4 yet. Okay, now it's not really necessary that we are going to, but I will be looking at a retest back at this previous low, which is also a double bottom, previous top as well. Yeah, so I'm looking at this, something like that. Yeah. Now it's possible that we have an ABC, WXY, yeah, over here ABC, and another ABC. I will be looking at this actually to make a good trade on the upside, and we can look for the 81.50, or even go a bit higher up to the 83.53. Or we can also in the waves 3 and 4, if we take into account the current level, yes, we'll go on around the 82, 83 area as well, right? But if we consider another move down here around this channel, again we are reaching about the 82, 83. So this is the area where I will be looking for a reversal, okay, on the downsides. So one move down in the short term, medium term upside, and then longer term all the way down. Yeah. And last, let's have a quick look also on euro against the Canadian dollar. EURCAD. For me, this is a big triangle. Okay. A big triangle that we're looking to complete a triple zigzag, right? Now, so we've done wave B as a triangle, and we'll go out for wave C, which is wide, the wave Y as well. Now, here's the thing: these two signals, to me, mean we're gonna get another leg down. Yeah? We're gonna have another overthrow, another false break outside the triangle here in wave B, and then we're gonna move all the way up. Okay. The truth is, we got a very good signal here. If you check these two levels, yeah, we've got a very good signal on the MACD and on the RSI, okay? But it will become even better once we break below this previous low of 153, or at least go there. So I'm expecting that 153 to act as some sort of reversal on the upside, okay? This will be my level over here. So this will be all for the day. Well, thank you for watching. Once again, if you have any alternative scenarios in mind, if you have spotted anything, do not hesitate to let me know, and I will get back to you as soon as I can. Thank you very much for watching, and we'll speak again tomorrow.